So guys, we are back with another round of portfolio reviews, and I've got to tell you, I am very excited for this one. We've got a handful of really interesting portfolios to look at today, and we are going to go under the hood and take a look at each one. We'll check out all the holdings, and I'll give you my honest thoughts on what I like about these portfolios, as well as what I think could be improved. And as we're going through these guys, please keep in mind that I am by no means a professional. These are just going to be my very amateur opinions, so definitely take them with a grain of salt. And remember that at the end of the day, this is really all just for fun. Now, real quick, before we get into it, if you want to have your portfolio reviewed by me in one of these videos, just fill out the form I have linked in the description. And also, as we're going through these, leave a comment below and let me know your thoughts on these portfolios. I'd be curious to get your feedback as well. All right, guys, now getting into our first portfolio of the day. This one belongs to my friend Cole, who's pretty new to all this investing stuff. Cole's been investing for less than 1 year and has a relatively long time horizon and plans to live off dividends sometime in the next 2 to 3 decades. Now, every single month, Cole is hitting those contributions pretty hard and is investing about $500 per month, which, breaks down to, on average, in a 4-week month, $125 a week. Now, in the notes here, Cole says, I just turned 26 years old in September, and I started investing at the beginning of 2024. So Cole is about a year into it. I try to invest $500 every month, but sometimes it's less than that. I invest $5 every trading day into VGT and VOO. I've recently sold out of JEPI and JEPQ and bought into Waste Management because I bought into them without really understanding what they are and felt safer going into a growth company that I know and I use. Now, real quick, before we take a look at the portfolio, Cole, I want to applaud you real quick on getting out of JEPI and JEPQ. Not so much because I think that they're bad funds. I think out of all the covered call ETFs, those two seem to be the better out of the bunch, in my opinion. But I think it was a good move getting out of those two funds for the same reasons that you mentioned. They're just a bit over your head. You're a brand new investor and that stuff can be pretty complicated. So hats off to you for making what I think is the right decision and getting into something that you understand a bit better. But anyway, guys, now taking a look at Cole's portfolio, he has shared it with us here over on Getquin, which is one of my favorite portfolio trackers out there, guys. I think Getquin has one of the cleanest interfaces of all the portfolio trackers that I've ever used, and one of my favorite things about it is they give you so much for free. You can use the platform for free. So if you want to check that out, there's going to be a link to it in the description of the video as well as in the pinned comment, and that's going to apply to all the different portfolio trackers we'll look at today. Everything's going to be in the description as well as in the pinned comment. But anyway, back over here, Cole has a portfolio of about $10,600, so that's looking really good. I'd say that's some killer progress for only having invested for about a year, so good job, Cole. And if we look at the diversification in this portfolio real quick, we can see that almost 40% of the portfolio is in ETFs. We'll take a look at those in just a moment, and then we have the remaining about 58, 59% in stocks, and then it does look like there's a little bit of cash here as well that Cole has yet to put to use. But anyway, now scrolling down, taking a look at the holdings in this account, we can see that there are 3 different ETFs. We have VOO, we have VGT, and Cole mentioned both of these in his notes, and Cole also has SCHD in this portfolio. And in addition to these 3 ETFs, we can see that there's a handful of individual companies here as well. If I expand that, we can see that there's a couple more down there. And I gotta say right off the bat, I really like the makeup of this account. I think that the breakdown between ETFs and individual companies is pretty fine as well. I might have more of an issue with it if there were more like speculative companies in this portfolio. But as we can see here, these are all very big blue chip recognizable companies. I think all of these are sleep well at night stocks. I have a lot of these in my own portfolio as well. We have Realty Income, Visa, Lowe's, J&J, Waste Management, as Cole mentioned already. We have Procter & Gamble and then Coca-Cola as well. So I think all of that's looking really good. And as Cole said earlier, he's buying into VOO and VGT every single trading day. So I would imagine that as time goes on, ETFs, which like we saw are, about 40% of the portfolio, I would imagine that over time, those will make up an increasingly larger percentage of the portfolio. But anyway, truth be told, I really don't have anything bad to say about any of these holdings here. I think this portfolio is looking really good, Cole. I think you've structured it really well. The only thing that I will say, I guess my only potential critique, is that I think you could make the argument that you don't need both VOO and VGT in this account. You see, VOO, which obviously tracks the S&P 500, already has significant exposure to large cap tech companies like Apple, Microsoft, Nvidia, and Alphabet as well. And as we can see, these are also some of the dominant holdings in VGT. So by investing in both, you're kind of double dipping into the tech sector, and I think for most investors, VOO alone is enough. However, if you have such strong conviction in the technology sector specifically and therefore want that extra exposure to it, then I don't think there's anything wrong with holding both of these. Just make sure that you're aware of the overlap between VOO and VGT. Overall though, my friend, like I said, I really don't have anything crazy bad to say about this portfolio. I think you are off to a great start. And I think if you just keep doing your thing, just keep rocking with something like this for the next 10, 15, 20 years, I think you'll find yourself with quite a bit of wealth. So you're on the right track and keep up the good work. And also thank you for letting me check out your portfolio. This was really cool to see. Now guys, moving on to portfolio number 2, this one belongs to Emmy, who's been investing for somewhere between 1 and 5 years. So also somewhat towards the beginning of their investing journey, and Emmy also has a very long time horizon and doesn't hope to live off dividends for another 30 plus years. So that's a lot of time left to invest. And every single month, Emmy's hitting those contributions pretty hard, investing somewhere between $750 and $1,000 every single month. Now in the notes here, Emmy says, I'm currently expanding my crypto position to 5 to 10%, while it's currently at 3.5%. I intend to add XLE, which is an energy sector ETF, and to further grow my SCHD and VTI positions. Let me know your thoughts. So a couple of things before we take a look at this portfolio. As a lot of you guys know, I personally am not a crypto guy, but you know, Emmy, you have a lot of time left before you plan to use your investments to pay your bills. And with that said, I think 5 to 10% of your portfolio earmarked for crypto is still a pretty small percentage. So I think it's fine if you want to try your luck with a little Bitcoin or Ethereum. I wouldn't go too crazy beyond that. And if anything does go wrong with these crypto investments, you have plenty of time to recoup those losses. Now also regarding XLE, which like I said is an energy sector specific ETF. So the fund only invests in energy companies. I personally don't think you need to add that to your portfolio if you already own VTI and SCHD. You see, VTI already gives you exposure to the entire US stock market, which includes all of the energy sector. So by adding XLE, I think it creates some redundancy in your portfolio, which I don't think is necessary unless for some specific reason you want additional exposure to the energy sector. But I don't know, I just can't think of a good reason why you'd need it. Not to mention, SCHD also includes energy companies. In fact, almost 12% of SCHD is in the energy sector, which would also contribute, I think, to the redundancy if you were to add XLE on top of those other two funds. But like I said at the beginning of the video, guys, these are just my amateur opinions, and I totally could be missing something here. So Emmy, you know, if you want to add some more color to why you'd want to add XLE in your portfolio, I'd love to hear about it. So let me know in the comments below. But anyway, now taking a look at this account over here using my Dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to this spreadsheet in the description of the video and in the pinned comment. But anyway, I would say that so far, Emmy's doing really good, almost $30,000 in this portfolio. And so far, you know, just in terms of share price, the account's up almost 20%. On a total return basis, is over 20%. And now if we jump over to the positions page, taking a look at all of these different holdings here, we can see that there are 10 holdings in total, not counting this cash position here. But this aside, there are 10 different holdings, 5 of which are ETFs, 5 are individual stocks. And if we scroll over here, we can see the ETFs make up just over 50% of the total portfolio. So in total, it's actually 51.4%. And I will say I like the weighting of ETFs to individual stocks in this account. I think that's one thing that you've done pretty good, but that aside, Emmy, I think we've got some work to do here. So just going back and looking at these positions, I mean, starting with some of these ETFs here, we have IVE, we have VTI, and we have IXN here, the value ETF, the total market ETF, and then we have just a global tech ETF. Now, between these three, if you went and looked at the top holdings across the three of them, you'll see a lot of overlap between these. These are going to be companies like Apple, Microsoft, Nvidia, Berkshire Hathaway. You know, if you look across the board, you'll see those companies and those types of companies in pretty much all of the top 10 in those three ETFs. So I think that there's a lot of redundancy just with those three funds there. Not to mention, in addition to owning those top stocks in these three funds, you also have a few of them individually, like Berkshire Hathaway. You own Apple outright, and you also own Nvidia directly as well. And if it was me, like, I'm looking for simplicity here. How can we simplify this portfolio, reduce some of the overlap, reduce some of the redundancy My take is I think you can get by just owning VTI. I don't think you need some of these other funds like IVE and IXN. I think you'll be totally fine as far as ETFs go, just owning VTI and SCHD. And with that said, I don't know that there's a good reason to own IWM either, which is a Russell 2000 ETF. Once again, small caps are already going to be included in VTI here. And historically, VTI has outperformed IWM while offering much more diversification. So I just can't see a good argument for owning IWM. And with that said, the couple of standouts in this account do seem to be Palantir. I know that's a pretty hyped up stock right now, and you've done pretty well with it. If we scroll over looking at the returns, you're up almost 50%. So I don't necessarily have an issue with this being in the portfolio, especially considering it's such a small percentage of the portfolio. It's only, it's not even 2%. And the same here with AJG. I'm not too familiar with this company, but it looks like you've done pretty well with it so far. It is, it does have a pretty big weighting in your portfolio, about 9%. But from what I've seen in the financials, this doesn't look to be a terrible company. So I don't know that I have much of an issue with you owning this either. So overall, if I was you, I would consolidate almost everything in this account to just VTI and SCHD. I just think you could do it so much simpler with a lot less overlap and redundancy. And in doing so, you'd still be able to benefit from the best of all worlds. You'd be getting pretty solid share price appreciation, dividend growth, and you'd also still be very well diversified. With that said, Emmy, I really appreciate you giving me the opportunity to take a look at your portfolio. This is really cool to see. And it's always interesting to see how people structure their portfolios differently. It's good for me to look at how people do things differently. So I appreciate it. And ultimately, I think you're on the right path. You've done pretty well with these holdings. I just think that you could simplify things a lot more. All right, my friends, now moving on to our third portfolio of the day. This one is very interesting. This one's the most interesting one out of the day. I'd say this belongs to Chris, who's been investing for somewhere between 1 and 5 years. So kind of like the last two guys, somewhat towards the beginning of his investing journey. And Chris has a very long time horizon and doesn't realistically hope to live off dividends for another 30 plus years. Now, as far as the contributions, Chris is hitting it super hard and is investing $1,500 every single month, which is just incredible. And furthermore, looking at these notes, what's even more incredible is that Chris is only 18 years old. Chris says, I recently joined the military, so I'm investing all my money into stocks and ETFs as I have no expenses. That's awesome, Chris. Chris says, I've got a pretty high tolerance for risk, as you'll see in the portfolio, with an additional $500 in Bitcoin. All right, guys, now taking a look at Chris's portfolio, he shared it with us over here on Blossom. Shout out Blossom. I had to rep it with the sweatshirt today. And a lot of you guys have heard me talk about Blossom before, but in case you've never heard of it, Blossom is a really cool app. It is like the only social media platform specifically for investors. And as we scroll down, you can see there are hundreds of thousands of investors at this point on Blossom, just talking about their portfolios, sharing what they're buying. It's a really cool place to be if you're an investor. And if you guys have ever wanted to see what I'm buying every single week, or if you want to see my full portfolio, you can do that on Blossom as well. That's another really cool thing about this platform. It also has like a portfolio tracking component to it, and it's all public. So if you've ever wanted to see my full portfolio, just head over to Blossom, download the app. There's a link to it in the description of the video and in the pinned comment. And I'm super easy to find. My username on here is just Ryne, so you can find me pretty quickly. But anyway, guys, jumping back over to Chris's account here and just scrolling down, taking a look at the holdings here. It's pretty consolidated. There are only 5 different holdings in this account. It looks like 4 of which are ETFs and only 1 individual company, with that sole individual company being none other than Realty Income. Now, truth be told, the only 2 things that I like about this portfolio, and I hate to say this, Chris, but the only 2 things I like about this portfolio are SCHD and Realty Income. These other funds here, like UPRO, if we zoom in on that, that's the ProShares Ultra Pro S&P 500 fund. There's also TQQQ, which is the ProShares Ultra Pro QQQ. And then we have BITX, which is the Volatility Shares Trust 2X Bitcoin Strategy ETF. And all of these funds are like futures-based funds. So like in the case of BITX right here, it looks like it trades Bitcoin futures to try to generate twice the returns, both on the upside and the downside of Bitcoin. And a similar approach is taken here with UPRO and TQQQ. Now, in my opinion, derivative-based ETFs like these 3 here, which, make up over 85% of your portfolios, we can see, UPRO is about 66% of your portfolio. I don't think these are suitable at all for a new investor, especially someone like yourself who is just getting into this at 18 years old. I could be wrong about this, but I'd be willing to bet that you don't fully understand how these funds actually work. You said you have a pretty high risk tolerance, but dude, you're only 18 years old. You really haven't been investing for probably that long at all. I think you'd be surprised at how much you're overestimating your risk tolerance, considering you've never been through a serious downturn. And upon going through that, which at some point or another in your investing journey you will, I'd be surprised if you didn't change your tune. At your age, Chris, time is your greatest asset. And with that said, I think it's great that you're investing. It's so rare to see someone your age already thinking about this stuff. So I think it's great that you're even investing at all. But you're going to be so much better off in the long run if you adopt a long-term focus on steady compounding, rather than trying to go to the moon with these speculative, complex investment products. With that said, I'd so much rather see you putting your money into just something more simple and straightforward like the S&P 500. I know it's not as sexy. I know it's not as exciting as the 2x Bitcoin leveraged ETF, but I just think it's the way to go. Like I said, you have so much time on your side that you don't need to be reaching for gains with these super risky funds. Just have some patience. Okay, just slow down a little bit and keep it simple. There's no need to put money into things like this that have so much more risk. With all of that said though, Chris, overall, I think you're on the right path. I really, my hat's off to you for even just thinking about investing at your age. It's such a rare thing. So I'm glad to see you taking at least some action. But with that said, guys, those were our 3 portfolio reviews of the day. And if you want to see how I'm investing here in 2025, then check out this next video right over here. In this one, we'll be talking in depth about the current state of my portfolio, both the good and the bad, as well as what my game plan is for this year. So click right over here to learn all about that, and I'll see you in the next one.